and welcome to Markets and Macros. I'm Lata Venkatesh. With me is Anuj Singhal. Plenty of markets and macros to discuss. A market that is slightly outperforming the Asian indices, even if it's a little downbeat at the index level. And macros, the big consumer inflation number that came in yesterday, which seems to have excited the market just a tad bit. But first, Anuj, welcome, and what's your take on the way the markets appear to be hugging that 5260, 5270 mark, and yet somewhat outperforming global cues?
Yeah, Lata, you mean 6260. I think the bulls would have got a bit of a nervous breakdown. Okay. Yes, but the Nifty is just holding on to that, and within that, as we expected, it's the day of mid caps today. In fact, the advance decline ratio today is better than yesterday. That's telling you something. Yesterday was a day of large caps. Today is a day of mid caps. You've seen some bit of outperformance, but I think the trading action as of now is really big positive for the bulls, because that's telling you that the market is not prepared to even give up 1/3 of the gains that it had in yesterday's trade, in spite of relatively weak global cues. I think that's a bit of a positive. And again, this whole decoupling, if it has to happen between developed markets and emerging markets, a lot of people believe that maybe India would be one of the big beneficiaries of that. So really, so far so good, let's put it that way for the bulls.
Maybe it's a little early to say whether there will be a tactical up move in emerging markets simply because we got one bad jobs data. Almost all the experts we spoke to have been saying that this number could be revised upward. Yes. It's a winter impact and things like that. So let's see before we count our chickens. Important to note that for the moment the Indian markets are acting with a little bit of resilience. Let's take you through the top headlines, and we have a lot of trading and macros to discuss. Most Asian markets fell today, tracking the weakness in the US markets and poor economic data from Japan. Markets were also spooked by a Fed governor's comments. US indices fell on concerns over weak December jobs report, as well as remarks from a Federal Reserve official indicating that the Fed may continue its tapering program. Most European indices have ended higher on Monday, buoyed by shares of banking stocks after regulators eased a Basel leverage ratio rule. US Treasury yields fell for the second consecutive session, while the euro and the yen fell marginally against the dollar. From commodities, gold has traded at a one-month high at levels close to 1250 levels, probably because of the risk-off in equities, while Brent crude was subdued on expectations of a return of Iranian crude supplies. Okay, that's how the globe is looking. Let's tell you what we have lined up for you in the first hour of the show. We will begin with market talk with Dipan Mehta, the veteran BSE NSE member. Thereafter, macro trends with former Deputy Governor of the Reserve Bank, Shubir Gokhran, now Director of Research at Brookings India. And on our corporate radar today is Mr. C.P. Gurnani, Managing Director and CEO of Tech Mahindra, the company that walked away with the top honors at the India Business Leader Awards that were given away yesterday.
Yes, indeed. Let's welcome Dipan Mehta then, our first guest on the show. Dipan, hi, good morning. Broader market call. Do you think the consolidation phase for the market is going to extend for a bit more, or was yesterday a signal that the market is ready to break out and move towards new highs?
Well, I think in the immediate short term it's a bit difficult to call, but the earnings season at least seems to have begun on a right note. I think Infosys, IndusInd Bank came out with good set of numbers, although they were disappointed with some of the mid-cap stocks like Exide Industries and CMC. But broadly, I think that this time around we should see good numbers coming through from a whole host of industries and sectors, and that will keep a lot of investors, institutional as well as retail, interest in the markets. And some of the investment themes which we discovered in the previous quarterly season, I think should mature into this quarterly season as well. And therefore, right now, I think at least we are focusing on what companies have to declare and what managements have to say, and whether there's an actual improvement at the ground level which is getting reflected in the corporate numbers. So my sense is that I think the markets should be steadily and positive kind of outlook, based purely on the fact that this time around to the earnings season will be quite interesting and positive.
Okay, before we ask you specific stocks, Dipan, year to date, from Jan 1st up to Jan 13th, we saw banking and